Thank you for joining us to discuss FuboTV's first quarter 2021. With me today is David Gandler, CEO and co-founder of Fubo, and Simone Nardi, CFO of Fubo. Full details of our results and additional management commentary are available in our earnings release and letter to shareholders, which can be found on the investor relations section of our website at ir.fubo.tv. Before we begin, let me quickly review the format of today's presentation. David is going to start with some brief remarks on the quarter and Fubo's strategy, and Simone will cover the financials and guidance. Then I'm going to turn the call over to the analysts to dig into Q&A. Before we begin, I'd like to remind everyone that the following discussion may contain forward-looking statements within the meaning of the federal securities laws, including statements regarding our financial condition, anticipated financial performance, market opportunity, business strategy, and plans, and the expected launch of Fubo Sportsbook. These forward-looking statements are subject to certain risks, uncertainties, and assumptions. Important factors that could cause actual results to differ materially from forward-looking statements can be found in the Risk Factors section of our annual report on Form 10-K filed with the Securities and Exchange Commission on March 25, 2021, and our other periodic filings with the SEC. These statements reflect our current expectations based on our beliefs, assumptions, and information currently available to us. Although we believe these expectations are reasonable, we undertake no obligation to revise any statements to reflect changes that occur after this call. During the call, we also refer to certain non-GAAP financial measures. These non-GAAP measures should be considered in addition to and not as a substitute for or an annihilation from our GAAP results. Reconciliation of these non-GAAP measures to the most comparable GAAP measures are also available in our Q1 2021 earnings shareholder letter, which is available on our website at ir.fubo.tv. With that, I'll turn the call over to David.
Thank you, Brinley, and thank you all for joining us today. I'm very excited to discuss our Q1 2021 results and to give you an update on all the achievements our team has delivered this quarter. First quarter results were very impressive, and we commenced 2021 by raising our full-year guidance once again. We achieved our highest ever quarterly revenue, highest ever paid subscriber count, and highest ever viewership hours. As compared to the first quarter of 2020, we grew revenue by 135% to $120 million. Advertising revenue by 206% to $12.6 million. Paid subscribers by 105% to over 590,000. And streamed content hours by 113% to over 228 million. We accomplished all of this while making significant progress in our path to profitability, improving adjusted EBITDA margin by 33.5 percentage points year over year. This quarter represents an inflection point for our business, as for the first time we overcame historical first quarter seasonal trends and reported sequential revenue and sequential subscriber growth. Consumers are increasingly cutting the cord to go virtual, and they're choosing FuboTV. Net subscriber additions in the first quarter were approximately 43,000, compared to a decline of approximately 28,000 over the prior year period. Since the first quarter of 2020, we have reported approximately 303,000 net adds, which resulted in subscriber growth of 105% year over year, compared to only 24% growth for the entire virtual MVPD market, as reported in Nielsen Media Research over the same period. Equally noteworthy, we achieved strong subscriber growth efficiently, reducing sales and marketing as a percentage of revenue from 28% in Q4 of 2020 to 18% in the first quarter of 2021. Our investments in subscriber intelligence and insights to drive effective decision-making and content optimization play a critical role in our success. While some in the investor community anticipated elevated churn levels in Q1, due to gaps in our basketball coverage, we continue to achieve better churn with a 105 basis point improvement year over year. And as a result of our investments in subscriber onboarding, product enhancements, and content personalization, we continue to see year over year lifts in underlying retention. These investments, along with those in technology and platform stability, drove total viewership hours up to 228 million. And hours per monthly active user up 8% to an amazing 129 hours per month on average. We also delivered strong advertising revenue growth of 206% year over year to $12.6 million, and advertising ARPU of $7.11, driving us towards our target of more than double our advertising revenue this year. Our impressive engagement metrics, particularly our time spent, indicate that consumers prefer a holistic content bundle with a wide assortment of premium content. In our view, the virtual MVPD category will continue to gain popularity. Over the long term, we believe it will become more burdensome and expensive for consumers to actively manage numerous SVOD services, some of which carry slices of sports content. We expect consumers will look for a more unified and personalized streaming experience that provides easy access to premium content, favorite sports teams, and live TV channels, and of course, at a fair price. Consumers come to FuboTV for our superior value, our year-round content offering, live sports, and a customer-centric, innovative product experience. We continue to be measured and disciplined in our content approach, investing in data to make informed decisions on the programming our consumers want to watch. To further our sports-first differentiation, we recently acquired the exclusive rights to South American World Cup qualifiers, also known as CONMEBOL, featuring some of soccer's most competitive teams, Argentina and Brazil. We believe CONMEBOL will not only be a driver of engagement and monetization, but also a means to solidify our brand ahead of the upcoming World Cup in 2022. We've also signed new distribution agreements with Marquee Sports Network, Chicago, and AT&T Sports Network, Pittsburgh, that further extend our leading position as the live TV streaming platform with the most regional sports networks in our base package. Recent activity by gaming and distribution companies has validated our vision of creating an immersive sports entertainment experience. We believe we'll have a very distinct advantage compared to sportsbooks that are partnering with media and distribution companies. Uniquely, FuboTV will look to combine streaming and gaming under one data analytics platform, delivering a holistic and seamless user experience with lower cost of acquisition. To accelerate the launch of our owned and operated sportsbook and entry into wagering, in the first quarter we completed the acquisition of sports betting and interactive gaming company Victory for a total of $37.2 million, comprised of the merger consideration and equity compensation vesting over future periods. With Victory, we acquired the technology to build a consumer-driven sports betting product and accelerate our entry into the online wagering market. Our new Fubo Gaming subsidiary is led by my co-founder, Sung-Ho Choi, and Victory's Sam Ratner and Scott Butera, alongside key industry hires like Ali Ghanavati, our new head of regulatory technology. Our gaming team has decades of experience navigating the complex gaming regulatory environment and has already made significant progress. This is evidenced by our recent multi-market access deals with Caesars Entertainment, one of the largest gaming entertainment operators in the United States. Our Fubo Sportsbook is expected to launch in the fourth quarter, subject to obtaining requisite regulatory approvals. We are on pace with our internal schedule, making great progress in both market access discussions and product development. Our gaming team is growing at a fast rate, already hiring dozens of full-time employees, including experienced industry executives. Turning to our predictive free-to-play gaming strategy, we are now completing our minimum viable product and are excited to bring it to market. We plan to test the experience integrated into our core video product in the next few weeks. In summary, it has truly been a phenomenal quarter, positioning the company for a stellar 2021. Not only do we have many growth opportunities in the market to be excited about, but we're also in the early innings, with 78 million households still tethered to legacy pay TV. The three megatrends I laid out 1 year ago, cord cutting, advertising, and sports betting, are converging and quickly evolving in our direction. We believe that with our forthcoming sports wagering integration, we have the platform and the expertise to innovate sports entertainment unlike any other company. I look forward to updating you on our progress and will be on Twitter later this evening to answer questions. And now, I'll pass it over to Simone to discuss our Q1 financial highlights and raised guidance for 2021. Simone?
Thank you, David, and good afternoon, everyone. In Q1, we exceeded our outlook and continue to make significant operational and financial progress. Our strong results reflect our strategic investment in people, product, data, and technology, with the long-term goal of achieving profitability and positive free cash flow. As I walk you through our financial performance, I will mention comparisons to the Q1 2020 pro forma FuboTV pre-merger plus FaceBank pre-merger, excluding the businesses we divested in July 2020, FaceBank AG and Nextwave. This is consistent with our shareholder letter. Total revenue for Q1 was $120 million, our highest quarter yet, with an increase of 135% year over year and of 14% sequentially over Q4 2020. This growth was driven by strength in both subscription and advertising revenue. Subscription revenue increased 131% year over year, driven by growth in both subscribers and ARPU. We grew subscribers by 105% to over 590,000. For the first time, we unlocked sequential growth in both revenue and subscribers in the first quarter of a fiscal year. And we achieved this growth efficiently, reducing sales and marketing expenses as a percentage of revenue from 28% in the fourth quarter of 2020 to 18% in the first quarter of 2021. Subscription ARPU expanded by 25% year over year to $61.98. This growth was propelled by investment in product, packaging, and upselling tactics. We're also very pleased to see that investment in our advertising business are paying off. Advertising revenue grew 206% compared to Q1 2020, fueled by improvement in all key levers: CPM, engagement, and fill rate. Advertising is also affected by market seasonality, so it is notable that for our first quarter of 2021, our revenue was on par with our fourth quarter 2020 ad revenue, setting us up for a solid year. As a result of increased per-user engagement and strategic investment in key areas, advertising ARPU increased 57% year over year to $7.11. We believe our investment in that ad tech will deliver attractive returns for our brand partners while growing CPMs over time. In addition, the growth of our subscriber base and increased engagement should allow us to keep expanding inventory and increasing ad ARPU going forward. In Q1, we delivered positive adjusted contribution margin of 5.3%, up 230 basis points from 3% in Q1 2020. This growth was driven by strength in our advertising business and subscription ARPU expansion, partially offset by contractual annual escalators in our content distribution agreements, most of which take place in January. Our content offering was largely unchanged between the fourth quarter 2020 and the first quarter of 2021. However, compared to Q1 2020, our content offerings this quarter was larger, given the addition of the Disney and ESPN networks. Our ability to support content additions while expanding contribution margin year over year reflects our overall approach of scaling efficiently while making investment in the future of our business. For these reasons, we remain very comfortable that we will be able to deliver year-over-year adjusted contribution margin expansion in the coming quarters. Operating expenses for the quarters were up 80% year-over-year, 55 percentage points lower than the 135% increase in revenue. This is evidence of our increasing operating efficiency. Notably, our reported subscribers-related expenses, which primarily consist of content cost, accounted for 94.6% of total revenue in the quarter, an improvement of 19 percentage points year over year. During the first quarter, we accelerated investment in team, marketing, technology, infrastructure, and wagering to build on our momentum. While this resulted in a planned expense increase in absolute dollars year over year, we significantly reduced expenses as a percentage of revenue. This drove a material year-over-year improvement in our adjusted EBITDA margin from minus 72.3% to minus 38.8% as we focus on our path to profitability. Headcount at quarter end increased 31% over Q1 2020 as we made investment in engineering, product, advertising, and wagering, among other areas. While we expect to keep adding headcount in the coming quarters to expand the business, we are confident in our ability to continue to deliver year-over-year margin improvements. Net loss was $70.2 million. This included approximately $21 million in expenses for depreciation and amortization, stock-based compensation, and accounting amortization of that discount. EPS in Q1 was negative 59 cents. This included 2 cents negative impact from expenses related to the launch of our wagering business, and 2 cents negative impact related to the amortization of the debt discount from the senior convertible notes that we issued in February 2021. Note that our EPS is based on weighted average shares outstanding in Q1 equal to approximately 119 million. We closed the first quarter with 140.5 million common shares outstanding, following the conversion into common stock of the 46.4 million shares of Series AA preferred stock reported at the end of 2020. This conversion was completed during Q1 in February. During the first quarter, we also strengthened our balance sheet and further optimized our capital structure. As of March 31st, we had $465 million in cash equivalent, and restricted cash, which included $390 million net proceeds following our issuance of convertible senior notes that will mature in 2026. In the quarter, we also fully repaid $5 million from other loans. And more recently, in May, we repaid the senior loan with AMC Network outstanding at the end of Q1, further advancing our progress to optimize and simplify our debt structure. Operating cash flow in the quarter was negative $53.9 million, an improvement of more than $20 million compared to the fourth quarter of 2020. Q1 number included $13 million impact of payments associated with wagering, one-time content true-up payments, and timing of some annual operating expenses paid in the quarter. Given our strong start to 2021 and confidence in our growth trajectory, we are increasing our full-year guidance to $520 to $530 million in revenue in 2021. This equates to year-over-year growth of 99% to 103%, and a 23 percentage point increase at the midpoint compared to our previous guidance. In addition, we are increasing our guidance for end-of-the-period subscribers to 830 to 850,000, implying year-over-year growth of 51 to 55%. This subscriber outlook reflects net addition of at least 282,000 across 2021, 22% higher than our 2020 net addition of 232,000. Focusing on the second quarter, our guidance for revenue is $120 to $122 million, implying year-over-year growth of 172 to 176%. And for subscriber is 600 to 605,000, a growth year-over-year of 110 to 111%. The above guidance does not include any projected revenue from online sport wagering. We're very pleased with our execution on our wagering plans and look forward to providing more details on launch dates and target markets during our second quarter earnings in August. As a 6-year-old company in a rapidly changing market, our priorities for 2021 include growing subscribers and monetization, investing in product, and expanding into sport wagering. As always, we balance investment in the future with an eye to efficiency, profitability, and cash flow breakeven. We're very optimistic about our ability to execute on our long-term goals. Thank you for joining us for the call today. We will now take your questions.
Thank you, Simone. We're now going to turn it over to our analysts to dig into some Q&A. We ask that you please try to limit yourself to 2 questions.